Elon Musk claims he no longer desires to purchase Twitter. Late last Friday, the CEO of Tesla alleged that Twitter had broken the conditions of the $44 billion transactions by failing to disclose adequate information about bogus accounts using its platform. The simple act of leaving won't be possible though. Musk will have a battle on his hands to break out of the agreement, just as he did to win the arrangement with Twitter. This puts Twitter in a tough position right now. What's good, you guys? This is Market Thrive. And today, we're going to talk about the issue between Elon Musk and Twitter and the reason why you should avoid buying Twitter stocks. Before we start the video, I would just like you to do me a favor by just hitting that subscribe button and the bell notification down below to keep you updated on this channel. So without further ado, let's hop into it. On April 4, the price of Twitter increased 27%. That took place following the disclosure that Musk had bought a 9.2% interest in the business. Musk, the Tesla CEO, then declared his intention to buy the firm outright by making an offer of $54.20 per share in cash for all existing shares. In exchange, the corporation received a $44 billion valuation. Finally, the acquisition was approved by the board of directors. Finally, Musk withdrew his offer after several weeks of talks. He made this decision in light of differences of opinion over the number of spam or fraudulent Twitter accounts. The discussion is currently taking place in court. An October trial of 5 days is anticipated. The price of Twitter fell by 7% when Musk retracted his offer. So the first question is, why did Elon Musk get cold feet on Twitter? Since its inception, Elon Musk's offer to purchase Twitter has been rife with controversy. Musk and the corporation reached an agreement in April to sell the business for $54.20 per share and go private. But soon after Musk's suggestion, he started voicing worries about phony bot accounts on the platform, and he said that Twitter had not given him proper information about the problem. Musk claimed that Twitter had broken the terms of the agreement when he withdrew his offer. Experts, however, think that this was only a pretext for walking away from the agreement. Since April, there have been significant changes in the market, and the offer to purchase Twitter now seems excessive. The board of directors of Twitter has so indicated that they are eager to extend this agreement, particularly at the price and conditions that were initially outlined back in April when this transaction was revealed. According to our source, the CEO and general counsel have been communicating with staff behind the scenes that they want to move forward. Thus, they aren't going to let Elon leave without a fight. Based on the conditions of the acquisition deal with Twitter, Musk would anticipate paying a penalty that is at the very least $1 billion breakup charge. He does not, however, have much flexibility under the terms of the agreement to leave and settle for just paying the $1 billion breakup fee. It's unclear if his criticism of Twitter justifies letting him off the hook with that amount. Additionally, Twitter is within its rights to try to pressure him into completing the deal. They can literally compel him to purchase the business at the agreed-upon price under a clause in a contract. According to some observers, there may be a third option, which would involve greater compensation. Although, we don't yet know what the final result will be. He won't be able to walk away from the situation without making a payment. However, how that might appear and how that might benefit either party is all open questions. Morale has been fairly turbulent and chaotic over the past few months due to the numerous modifications and cost-cutting measures Twitter has been implementing. Morale has been quite low in several places. Elon has targeted numerous Twitter executives and employees by name, particularly those who work in what they refer to as their healthcare or ethics departments, according to other businesses. These are the divisions entrusted with creating Twitter a more welcoming and secure space for dialogue. And they have been attacked by Musk over the past several months because he has raised a lot of concerns and doubts about what they're trying to do and whether it's acceptable. It essentially made fun of the concept of content moderation. The morale in those divisions has been really low because, among other things, they have felt like he doesn't value what they do. A small portion of the Twitter staff, nevertheless, have been quite enthusiastic about Musk. Even though it is undoubtedly the most significant social network in the world in terms of influence, Twitter is a firm that has been somewhat lagging behind its competitors in terms of its ability to expand and make profits for a long time. In terms of its power to influence world events compared to its size, it punches significantly above its weight. Thus, whenever there is a mismatch like that, there has always been this sentiment throughout the company. Twitter has so much promise, but they never seem to be able to take advantage of it. There is a perception within the organization that the recent months have snapped their skill, productivity, and focus. It will be very challenging to bounce back from this and recover from it. Additionally, a former Twitter official claimed that the board claimed that this agreement with Elon Musk was the best conclusion for both the firm and its shareholders when they approved the sale. Then, as you may recall, Jack Dorsey, who was then the company's CEO and was also on the board, referred to Elon as the singular solution I trust to lead Twitter. That is to say, statements of that nature have informed Twitter's staff, investors, and advertisers that this was their best course of action. What happens to Twitter now that Musk plans to leave and the entire arrangement is seriously in jeopardy? Twitter has already stated that this was their best hope, but now it's gone. They're on their own. There is a sense of beginning again and rebuilding from the ground up. And I believe there is a great deal of anxiety within the organization and among some of the senior executives who have left or were a part of the company in its early days that Twitter is in a much more difficult situation now than it was back in April when this entire saga started because the economy has weakened. The organization is therefore experiencing a genuine sense of perplexity, dissatisfaction, and uncertainty, and many employees are wondering what the point of it all was. Twitter shares have seen a wave of price drops from Wall Street analysts who believe the legal dispute will go into next year amid all the confusion produced by Musk's offer. Twitter needs to concentrate on its daily operations in addition to the court processes. According to Daniel Ives of Wedbush, who lowered his price objective on Twitter shares from $54 to $30, the company also has a lot to prove to its stockholders. The Twitter crisis, according to Truist analyst Youssef Scully, is a nightmare scenario because it entails risky actions on the parts of both parties. Qualley predicts that the stock could drop to $20 levels if Twitter is unable to persuade Musk to seal the agreement. If Twitter were profitable, its relatively moderate growth rate wouldn't be such a concern, but it isn't. Early in 2018, Twitter's bottom line turned positive, but it has been losing money ever since the pandemic started. Twitter's operations suffered a $492 million loss in 2021. Investors were warned by the corporation to anticipate an operational loss between $225 million and $175 million for the first 3 months of 2022 when it released its fourth quarter financial results in February. The increases in the stock price that Musk antics brought could soon disappear if the firm can't right the ship soon. So what do you think about the issue? Feel free to jot down your thoughts in the comment section below. If you enjoyed today's video, please leave a like. And if you want to stay updated on our posts, hit that subscribe button as well. Once again, this is Market Thrive, signing off.